Hello, everyone, and first of all, I would like to say thank you, Istanbul Blockchain Week, for this opportunity. It's great, and let's move on. And guys, I would like you to say a few words about your business, about your company, and after that, we can discuss my prepared question. Your turn, please.
Okay. Our company is named Asterium. We build the crypto and digital infrastructure that connects the crypto to the real market, to the real life, let's say. We have the crypto exchange. We have the custody wallet. We have the crypto cards that are available for everyone right now at our booth there. We have the stablecoin and gold token that are backed by the Central Bank of Uzbekistan Republic. So that's basically it. If you need more information, if you are interested in, you can go to our booth and get a free card, for example, and more information.
Zaher, your turn, please.
Hello, I'm Zaher. I lead the DMCC Crypto Center, which is the Web3 blockchain ecosystem at DMCC. We specialize in licenses, setting up companies, anybody looking to expand into Dubai, being in a regulated environment, we support with that.
Okay, thanks. And a quick intro about Tangem. Tangem is a crypto ecosystem of 3 products. The first one is a cold wallet to store crypto offline. The second one is hot wallet for daily transaction, for daily usage. And the third one is a Tangem Pay, is a crypto payment solution which allow to spend your crypto assets as fiat. Okay, so thank you guys for your interest, and let's move on to the first question. The concept of blockchain as a trade infrastructure has been around for quite some time, and yet mainstream transition hasn't yet happened. The question is, in your opinion, in your view, what has fundamentally changed over the past 2 or 3 years from a technological, regulatory, or geopolitical standpoint? Are the conditions for a paradigm shift now in place? So, please.
Yeah, I think that first of all, the regulatory changes in many countries, in many markets. For example, we are coming from Uzbekistan, and it's like the crypto has passed from the totally banned state in our country to totally legalized state. It's regulated, it's allowed by the government, the regulators, and all stuff. And also, we have the change from completely speculative assets to real use assets, right? So before, most of the people use the crypto just to hold it and sell it at a high price or something like that. And right now, it gets more stable coins. They're like advanced. Like we have the CDBCs. Also, most of them based on the blockchain technology in general. And it's getting more involved in the real world economic rails, like cross-border payments and all this stuff. Like, for example, the Ripple, for example, right? It's being adopted by American banks, the Japanese banks, and a lot of that. We didn't have it in 3-4 years ago. Right?
So, in your opinion, government, in your case, Uzbekistan government, Uzbek government became more interesting in crypto technology and Web3 infrastructure nowadays, yeah?
Yes, definitely. Not only in Uzbekistan, like all the countries in our region. For example, in Russia, they started to make new laws to do something with that. Into Turkey as well, as I understand, they start to thinking about regulating and do all that stuff.
Okay, thank you for your opinion on that matter. And Zaher, what do you think about that?
Yeah, I totally agree. I think I can summarize that under institutionalization. And we've seen that very clearly in Dubai for the fact that, yes, the laws are there, but we've seen practical use cases. So we've seen the regulator issuing 45 licenses for now. You have the likes of Binance, OKX, Bybit, all the major exchanges being licensed there, but also custodians, also asset managers. You have a full ecosystem. And most recently, the regulator introduced a framework called ARVAs, Asset Referenced Virtual Assets, which allowed for the tokenization of real estate. So right now, if you're a resident in Dubai, you can actually buy a portion of a property fully legal by just investing 2,000 dirhams, which is roughly $800, and owning a part of a property. We at DMCC, we're working on tokenization of Silver Bar, which is the largest silver bar in the world. It's a Guinness record. Also, investors would be able to have access into fractionalized access to that. So owning a piece of history. But we see more assets being tokenized, the likes of planes, shipping vessels. So you can actually own a portion of a business that generates profits. And that is all thanks to regulations. So the regulatory environment, that's very important. And that actually helps shifting from a speculative asset, as you said, people speculating on meme coins and Bitcoin, all the way to assets that are backed by RWAs, something physical, something that actually produces a real yield.
Yeah, if I'm right, it was a first case with NFT or RWA in Dubai when guys collected huge money to build some part of real estate. Maybe 3 or 5 years ago.
We actually still have a project called the Crypto Tower, which is a dedicated tower only for crypto businesses. So if you're not a crypto business, sorry, you cannot be there. And they had initially in mind to raise funds using NFTs. So every NFT is equal to 1 square meter, and by owning that NFT, you are eligible for profits from the rent for that specific space.
It's a building of dreams.
Yeah, we also have talking about the RWAs. We also have a AUZ token, which is like backed by gold, and we also you start buying the small shares of this token, and then you can exchange it. Swap it to real gold bar at our bank. Right?
Okay. My question mostly for DMCC, and it is about Silver Bar. DMCC bridge physical commodity trading with tokenization and Web3 infrastructure. In 2025, you tokenized the world's largest silver bar, weight almost 2 kilograms. And the question is the tokenization of real-world assets the next chapter in the history of commodity trading, or is it just merely a marketing experiment? And what will it take for tokenized assets to scale to fundamentally new level across, let's say, the Middle East and Central Asian market?
Absolutely. So at DMCC, we play 3 major roles. We are the master developers of an area called JLT. It's a 2 million square meter development. So we have retail outlets, we have hotels, commercial towers, and we are the licensing authority over this area. That is the second role. And the third role, we are ecosystem builders. So we've built multiple ecosystems, the likes of DGCX, which is a derivatives exchange for commodities and equities. We have the DDE, Dubai Diamond Exchange. We've got the coffee center, the tea centers. And what we see blockchain specifically doing is being at the center of all of these commodities, at the center of trade. And when you use blockchain, whether for transparency, for transactions, for payments, that is really good, but also blockchain will play a major role, and is playing as we speak, a major role in tokenization. So having those ecosystems all together is very important to make RWAs happen. So to give you an example of the silver bar, we had to gather the largest mold in the world because the weight of the bar is 2 tons. So we actually had to create it for 2,000 kilograms and then trim it down to 1,971 because that is the year of establishment of UAE, 1971. And then that bar is actually stored in one of our facilities, the vault, which is managed by Brinks. Brinks is one of the physical custodians for precious metals and stones. So all of this, putting it together, cannot happen. Tokenization cannot happen without that, right? Yes, from a technical perspective, 2 lines of code, you can put anything on chain. That is easy.
Yeah.
But on the back end, we had to transport that physical bar to the vault. It's now stored, and then once you want to redeem, you have to actually go and redeem from a physical space. So answering your question, what actually is needed to make RWAs happen is the full ecosystem collaborating together. All the way from production to storage to the ability of innovation, the ability of traditional businesses looking into, okay, how can I tokenize and improve my business processes? So all of that is under ecosystems collaborating together.
Yeah, anyway, markets needs comprehensive solution. Okay, the next question for Asterium. Asterium is a licensed crypto exchange in Uzbekistan, and you are developing a comprehensive crypto ecosystem featuring a diverse suite of products. However, Uzbekistan remains a localized market.
Right.
And the question is, what is the next strategic step to transition Asterium into a core infrastructure for regional trade rather than serving exclusively retail users? And one more question.
Okay.
And do you already have any use cases of big businesses using your solutions?
Yeah. So the retail and working with like end customers was not the end goal for all the time, like from the start. And what we do, we build the infrastructure first. We build the legal infrastructure as well. We're working with our regulators. We work with the central bank. We work with the National Agency for Perspective Projects, established in Uzbekistan by the President decree. And yeah, so the goal is to build the infrastructure because we have a demand from end users. We have demand from like businesses to accept payments, for example, in a crypto. We have demand on on-ramp and off-ramp transactions, like to people come with fiat currency and want to buy cryptocurrencies.
Yep.
Yes, and vice versa. So some of people right now work in IT, for example. They work on a Western market, like remotely, and they need also to get these like payments. And someone has like income from businesses as well in crypto, and it can be like big companies. And the next step for us is the cross-border payments, because we also, like as Turkey here, we're in the middle, in between the east and west, basically. So we built the cross borders between China, for example, and Western countries. And right now here, we're interested in new partnerships with Turkey companies, for example, and we want to use our legal base as the as the base and to connect it to the Turkish market, for example, right? In the B2B, to make this B2B connectivity, to allow these cross-border payments. And about what you asked about
Use cases.
Yeah, use cases. Yes, we do. We have actually a lot of different companies working with us. It's like not sure if I can share the information on what exactly, but yeah, it is the working infrastructure.
But it works.
It works totally. It works totally. It works. We have like payments in USDT, in fiat currencies like yuan, USDT, and all this stuff.
Okay.
So yeah.
Yeah, it sounds great. Thank you.
Yeah.
So let's move on to the next question. Let's look ahead a little. In your opinion, guys, which payment tool will be most in demand by 2030 on a road like, let's say, Dubai, Tashkent, and Beijing? Stablecoins, CBDC, or tokenized deposits? And who will control this layer? And does it really matter who issues it?
I think it depends. Like all of that you said, like CDBCs and like stablecoins, they will probably have different roles. The CDBCs would probably be like more like local currencies, like digital local currencies for the local people. But the stablecoins could be used as for these cross-border payments between countries, right?
But some countries like China, India,
Yeah.
or even Russia are trying to test CBDCs between each other too.
Yes.
Yeah, no, it's not
Actually,
stable coins because the emittent is not regulated by these countries, and it's big issues, in my opinion, for these countries.
yes. We have our Humo token, which is not CDBC officially, but we use it for cross-border payments already. And in Russia, as you mentioned, they have this A7, A5 token as well, which is not
Yeah.
CDBC,
Yeah, yeah,
right?
yeah.
So that was the base of my statement.
Okay, and what's your opinion?
I think it's a combination of all of that.
Yeah, mix.
A mix, exactly. But mostly stable coins would be widely used. In Dubai, we have a very nice practical use case. We've got banks that have issued their own stable coins. So Zand Bank with their own coin, we have M Bank with another coin. They're all backed by dirhams, so they're stable relative to the dirham price. Now, how does that fit in? They create the rail between a digital dirham and a stable coin. So moving from USDT to a tokenized dirham is much easier rather than doing the on and off ramping
Yeah.
for the token. So I see a lot of the big corporates, a lot of the banks, financial institutions actually issuing their own stable coins backed by something, and that could eventually be used for transactions and cross-border payments.
Okay, thanks. Second personal question for DMCC. DMCC positions Dubai as a neutral jurisdiction for global Web3. Obviously, this is true. And the question is, but neutrality is hard to maintain in a world of sanctions and geopolitical risks. How do you balance staying open to global capital with meeting Western compliance standards?
Yeah, I mean, the beauty of Dubai is that you have a great regulatory environment. In the UAE itself, there are 5 regulators. You've got DIFC, ADGM, out of Abu Dhabi, the UAE Central Bank, and in Dubai, you've got a dedicated regulator for virtual assets called VAR.
Sorry to interrupt you. And all of these 5 organizations have like one association between each other, yeah? Or it's like a decentralized companies?
Yeah, so they work in silos, but that is the beauty about it because you have what we call legal arbitrage. So depending on what you want to do as a company, you are able to place yourself with the regulator that fits you best. And with VARA being the regulator dedicated for virtual assets, they have maintained the highest standards of compliance. And therefore, anybody that is not compliant, obviously with AML, KYC policies, is not welcomed there. And that's why all of the big names are there, and we've also seen a lot of the smaller players coming to Dubai to benefit from this. Yeah. But we love to collaborate with other regulators, with other government authorities. That's why we're here in Turkey to build that bridge between Turkish market, the UAE, and we've seen that very successful. We have more than 700 Turkish businesses registered at DMCC. So I guess coming back to regulations, once you have regulators that respect compliance, you will have the bad actors out of the market.
Okay, that's great. So, next question. Can Web3 replace or complement traditional trade rails like a SWIFT and correspondent banking? Or is it just for niche use cases like bypassing capital controls and fixing broken local markets? What's your opinion on that matter?
My opinion that it cannot replace it totally because like Swift, like it can be used as complementary, let's say, right? Because it can solve some issues related to Swift. So usually the bank transfers are long. It takes longer time than on blockchain. Yeah. It takes higher commissions and fees, right? Fee rates. So Web3 can solve this part. But you know, the Swift and similar systems, they are like established for like long time, and we can just replace it because it works. It has trust inside, right? And a lot of such things that we cannot replace in one day.
Yeah, sure. And what are your opinion?
I totally agree with that. I mean, Swift is already super big, and they move. Yes. I don't know what's after trillions, gazillions of money, right? I think blockchain can fit in really well to enhance and improve those transactions. And we've seen Ripple, for example, working with Swift rather than competing with it. And I think that's the way forward.
Yeah, because the speed of our life became extremely fast, and if guys from Swift can say you, sorry, this is a weekend, it doesn't work, so it is impossible nowadays, I think.
Not only that, let me add one point too. Stable coins and networks that move crypto are very important. But at the same time, we need to bear in mind that a lot of businesses are still very traditional.
Yeah.
They don't have the awareness, they don't have maybe the education about how I can use crypto, and hence they still use the traditional rails. And we've been seeing that a lot in Dubai, where cross-border payments happens through stablecoins, but once you want to pay salaries, for example, it's not paid in stablecoins, still paid in fiat. So you have to on and off ramp all the time to maintain your operational expenses.
Right. Yeah, but someday rails will change completely anyway. Okay, let's move on to the next question. How do you see the balance between decentralization and the need for compliance, like AML, KYC, in trade corridors between developing countries? And will the institutionalization of Web3 cause it to lose its key advantages?
I think we need trust. And that's why the KYC, AML, and FATF, for example, exist at all, right? We cannot build something that has no trust inside of it, especially if we speak about the big actors like companies, be it developing countries, be it developing countries or I don't know, G7 or someone like that, right? So still, we need to understand where the money comes from, what the entity that what is the source of the money being sent from one entity to another. We need to understand what the risks. For example, the Bitcoin, you know, it can be it can be fraud. It can be I don't know, from the bad sources, let's say, like darknet or whatever. So yeah.
I think there needs to be a balance between decentralization and regulations. And the way Dubai approached it, and I'm talking a lot about Dubai because we see it every single day, is by creating a dedicated regulator. Vara, when you talk to them and you say hyperliquid, they actually understand what is hyperliquid. If you go to a traditional regulator like a central bank and you say Uniswap, they'll be like, what the hell is Uniswap? So being a regulator that is dedicated for virtual assets, they understand what the industry is, they understand what the technology is, and they try to find that balance between innovation, decentralization, and being compliant at the same time. And hence, I think, you know, I'm a big pro decentralization. I'm a big fan of that.
Yeah, me too.
But at the same time, for mass adoption, you need regulations to cater to institutions and so forth. Right. So I think striking that balance between them is very important.
Right. Yeah, it's true. Okay, the next question. Smart contracts execute automatically, but real-world trade on new digital roads still depends on logistics, customs, and many off-chain risks. For example, freight between emerging markets can be delayed at the border, sensitive cargo can get damaged, or the delivered quality may not match what was agreed. And the question is, how can we reliably connect a smart contract with international trade law in this setting? And do we already have a working model of hybrid arbitration where local courts or international centers such as DIAC in Dubai can legally pause, change or reverse on-chain transactions when classic trade conflicts or issues occur? What do you think there?
Definitely, and we do have a practical use case. Dubai Customs is using blockchain on the back end for all the customs clearance. And that's why to clear a shipment in Dubai takes you less than 24 hours. And that's thanks to blockchain technology. Dubai Police is working with Cardano chain on forensics. So they have a very interesting project related to Interpol and how to find, to do forensics and analytics together with Cardano blockchain. We've seen blockchain used in the Road Transportation Authority in Dubai for vehicle management. So to renew your vehicle license, it takes you less than 20 minutes. You literally enter and then you exit and your license is renewed. Yep. All of that for an end user is amazing. It's fascinating. You're very happy about it. But on the back end, it's all the blockchain system being...
It's a million transactions.
Exactly. Yeah. And just recently, Dubai Airport introduced a non-passport regime where you actually pass through the passport control without even showing your passport. Right. So it's full of cameras. They take, of course, face shots, face ID, and then you just pass. And that your face ID is linked to your license plate, car license plate. Your car license plate is linked to your bank account. Your bank account is linked to your tenancy contract. So everything is linked together using blockchain systems on the back end. So we see this every single day in Dubai, and we're very, very thankful for that. So we're moving from theory, what blockchains can do, to actually practical use cases there.
Yeah, for normal users, this is the same case like our smartphone works. It doesn't matter how the million processors inside our chip or inside the graphic cards work, but it works.
Exactly. You just drive the car.
Yeah.
Not thinking how it works.
What's your opinion on that matter?
I agree. I would also add that the smart contracts you mentioned then can be used to automate stuff, like be it like face recognition or I don't know, like combining all of that into the one ecosystem that is working together. But still, we need some, as you said, about disputes and things like that. The cargo is not right in full amount and whatever. Still, these smart contracts and the blockchain should work with some legal institutions, I think. And we still need some people, some institutions, some probably legal companies behind that, and maybe some courts and government institutions as well to solve such cases.
And last question, but not least, and a little bit provocative.
Okay.
When we talk about Web3 as the infrastructure for emerging market trade, what are the hidden or unpopular risks? I'm talking about the uncomfortable truths that people usually don't mention in bullish Twitter posts or on polite panel discussion like this one. What do you think about it? I realized, it's too complicated.
Yeah.
Okay.
I think, it's still related to risks, I would say, the operational risks. And again, it must be regulated and overwatched, I would say, So.
Okay, and what's your opinion?
It's hard for me to think of something because from what I see, and you mentioned regulations, but the environment is already regulated in Dubai, so the risks there are minimal. But what I see, it's mostly, I would say, awareness risk, because a lot of people are using crypto, but they don't actually know where they're getting the crypto from. Sometimes you receive bad funds and you end up with locked funds on your exchange. So individual users, corporates, need to do their due diligence before actually receiving funds. And this is where, I think AML solutions, forensics come in place to actually make sure that, okay, the funds I'm receiving and the funds I'm sending are actually not flagged. They are clean funds. And of course, there are some times where corporates lose keys, send on a different chain, send to some random wallet. So this is more related to awareness and education. But as a financial risk, we don't see that anymore existing because of the proper regulations of those companies.
I agree to that because recently I have a friend who recently got his wallet blocked on exchange because he worked with some company. They sent him bitcoins, and these bitcoins were, I don't know, from some sanctioned people or, I don't know, companies.
Totally agree. Yeah.
Okay, that's all, guys. We strict to the timing, and that's all. Thank you for your attention.
Thank you so much.
That matter.
Thank you so much.
Thank you.
Thank you.
Thank you.
Okay, thank you so much.
Thank you.
Thank you. Oh,
thank you so much.
Let's take a photo together.